Bitcoin has been crashing non-stop for the last 2 weeks, and now it's bouncing a little. So, what is really happening here? Some say the downtrend will deepen, and others say the next uptrend is about to begin. Right now, it feels like no one has a clear read on this market. In this video, I'll break down exactly how to navigate this confusion step by step from the perspective of a top trader. So stick around until the very end. What's up, y'all? JC here. Just like in the last video, I'm here to break down my view on where Bitcoin stands right now. But let me be clear about this from the start. My analysis isn't some 50-50 coin flip where I guess long or short. I trade with logic backed by clear entry points and defined stop loss levels. And before I get into it, I noticed that out of every 100 people watching, 76 of them still aren't subscribed. It literally takes 3 seconds to hit that like and subscribe button, and it really helps me keep creating this content. At least watch through the whole video, and if it helps you, I'd appreciate it if you could drop the support at the end. So, what is my view today? Let me give it to you straight. Right now, I'm bearish. I know that most people don't like hearing that, because people usually only want bullish narratives. But there's no need to worry too much, because I do think that we'll see a bounce before things head lower. And if you stick with me until the very end, you'll see exactly why. Now let me explain the 3 main reasons why I'm leaning to the downside. First, August closed with the red candle. I already broke this down in my last video, but let me just quickly recap for those who missed it. The monthly close candle gives the clue. When a green monthly candle is followed by a red one, and the upper wick of that red candle takes out the wick of the previous green, then closes as a full red, backtesting shows there's a high probability of a move down, whether small or large. And to show you a few examples, in July 2023 on the monthly chart, the upper wick of that red candle took out the wick of the previous green candle, then closed red. And what followed after was a drop. Same thing in August 2022. After a green candle, the red candle's wick pushed higher than the previous green one, and then closed red in the end. And again, what came next was a decline. Take a look at the double top monthly candles in 2021. In both cases, the red candle's wick ran above the prior green, then closed red. And what followed each time? A drop. Yeah, so the August monthly candle closed red, taking out July's upper wick in the process. And as you saw, this setup has historically led to further downside with high probability. And second reason is the confirmed 3 black crows pattern on the weekly chart. On Bitcoin weekly chart, it printed 3 consecutive red candles, each one larger than the last. And in technical analysis, this is known as the 3 black crows pattern. It's actually the opposite of the 3 white soldiers pattern, which I mentioned in one of my previous videos, where Bitcoin prints 3 consecutive green candles, each one larger than the last, which signals strong bullish continuation. And here with 3 black crows pattern, it signals strong bearish momentum building. And the last time we saw a 3 black crows pattern on the weekly chart was in April 2022. Back then, the market also faced significant downward pressure afterwards, and the bearish trend often flips once price clears the open of the third candle. For example, in November 2019, once Bitcoin pushed above the third candle in the 3 black crows, the trend shifted, at least temporarily. And also in November 2018, the 3 black crows also appeared, leading to a 20% drop first, but once price reclaimed the open of the third candle, a new rally began. And however, in the September 2019 pattern, price failed to fully clear the open of the third candle, only leaving an upper wick before heading lower again. Lastly, the third reason I'm leaning bearish is the weekly bearish divergence. And for anyone who doesn't fully understand what divergence really means, let me break it down simply for you. Bearish divergence is when price makes higher highs, but major indicators like RSI is making lower highs, showing fading momentum and a possible trend reversal. And of course, the bullish divergence is the opposite, is when price makes lower lows but indicators make higher lows, suggesting weakening downside and a potential uptrend. Now, personally, I don't put too much weight on divergence by itself, but when it shows up on a weekly chart, That's not something you see often. The last time we saw this was back in 2021, right before the bear market began. And now it's back again, not something I can fully ignore. So yes, the chart is firing strong bearish signals. However, there's an important detail here. And this is why clicking off the video early is a mistake. Now let's take a look at the 1 hour chart. Bitcoin has been dropping, but each leg down is getting weaker. And that shows that short-term selling pressure is fading and there's room for a relief bounce. So how far can this bounce go? Let's break it down. From the all-time high, price dropped about 10% and then bounced up to the previous supply zone at 117K level. Then another 7% drop followed by a bounce back up to the nearest supply zone at 113K. And then another 5% down, and now we're seeing a small bounce again. And if the pattern repeats, this current bounce could push price back to the nearest supply zone at 111 to 112K level. Now remember the supply levels I just mentioned, 117, 113, and 111K, and go back to the weekly chart. Now overlay Fibonacci retracement from the high of the 3 black crows down to the low. 0.236 retracement, which is considered a mild pullback, sits right at 111.3K. And then 0.382 retracement, which is a standard pullback, sits at 113.8. And lastly, 0.618, the golden zone, sits at 117.9. In other words, these Fibonacci levels match almost exactly with the supply zones we've already identified, 117, 113, and 111. So here's my strategy. From 111K to 117K level, I'll be scaling into short positions as price bounces. And if the price drops without giving me an entry, it's a bit disappointing, but I'll simply wait for a better entry lower. And of course, no matter what position I take, I need a clear invalidation level, which means I need to know exactly how much I'm risking. Taking everything into account, my invalidation level will be whichever comes first. 119.4K. which is the zone right before the vertical drop carved out the low liquidity pocket, or 2, a weekly close above 113.5K, which is the open of the third candle in the 3 black crows pattern. Okay, let's wrap this up. Number 1, August closed red, taking out July's wick. 2, weekly printed 3 consecutive red candles, which is the 3 black crows pattern, and 3 weekly bearish divergence confirmed, and all 3 of these points toward increasing bearish momentum. So I'll be shorting into bounces, scaling in from 111 to 117K level, with my invalidation level at whichever comes first. 1, 119.4K, and 2, 113.5K, which is the open of the third red candle from the 3 black crows. Yeah, it's not an easy market right now, but I hope my subscribers to survive and thrive in this market. And of course, as always, I'll keep sharing my views confidently, win or lose. And that's it for today's video, and if you liked it, make sure you hit like and subscribe, and I'll catch you in the next one.